My mortgage has gone up another $200.
Basketball too.
So for that $158,000 home, you will have paid $449,000.
There is no lower rate to be had. Loan officers should never promise anybody that the rates are going to go down.
Yo, what's going on YouTube? It's your boy Michael, aka Mr. Drake Visions, and I am your credit CEO, back with another one. So you see the title, you see the thumbnail. So without further ado, let's get back into it.
Mortgage has gone up another $200. So over the last 3 years, my mortgage continues to increase $200. So over the last 3 years, my mortgage has gone up $600. And it's shocking. It is very shocking because I don't feel like people talk about this. Like,
All right, y'all. I want to stop it right there because I don't want to forget this thought. Um, when I think about normal people, like people who make income by just going to work and they don't get a raise until like a year, but they get like a dollar raise, not even dollar, they get like 50 cents raise, 25 cents raise. And just imagine buying your dream home and then the value of your home go up. Hooray. But then your taxes go up and then you got to spend an extra $100 that you didn't even plan for. Like you got in a neighborhood where you want your family to feel safe. You know what I'm saying? And you did what you're supposed to do, but because of money printing, now you can't afford the house that you just got, the dream that you had. I'm gonna let this play a little bit more, and then I'll probably get back. I'll probably get more in detail with it, man, because this is like a grown up conversation for real.
people are all, often glamorizing home ownership, but not really talking about the reality of home ownership in today's economy. So, not only has my mortgage gone up, my HOA continues to increase every year. And it's just all shocking. It is all shocking because I feel like it's not spoken about. Like, I live in South Florida, and so I guess this is something I'm gonna have to get used to because everything is sky high here. The property taxes are high, the cost of living is high, and so I guess it's something that I need to prepare for every year because it's just expensive to live here. But a lot of times when you think that you're buying a house, you think that you're gonna have this set rate and that you're good and you won't have to handle you won't experience any increases like you would if you were renting. But reality check, you will experience some increases, especially depending on where you live at. So I just wanted to make this video to bring awareness around the situation that your mortgage payment can and will increase. And that if you are thinking about buying a house, like, make sure you go into the process being fully informed and aware of what you are signing up for.
Big screen. All right, man. Yeah. I really feel where she's coming from because she didn't have no guidance. I didn't have no guidance when I bought my house, but she bought in South Florida. So what happened during the pandemic is a lot of people started coming from the north, and then a lot of people kept coming from the west, which is California. So when they said, "Hey, your job can work from anywhere," people just started to move and pick up because they asked the question, "Hey, how long does this last?" Okay, cool. If I got a six-figure a year job here in California and I can't even buy a house, I could just move on. A lot of people actually went to Texas, Florida, and I think those are like the two major places. Now, what happened is in her case, South Florida, the insurance, they like started raising the insurance rates. They started raising the rent. They started doing a lot of stuff to us Floridians. Well, I'm kind of a Floridian, you know what I'm saying? So I had to move because a lot of people were coming down here with more money than what we get, and they was using that money to like buy people out. So a lot of people were selling their houses at double the price. You know what I'm saying? I can't fault somebody for buying a house at 200,000 and then selling for 400,000 in less than a year. You know what I'm saying? Like, you will never get that rate of return ever again. right? You literally doubled your money, and you didn't even have to spend no money for real. You probably put down a down payment or something, but you end up getting that money back plus double, and then you can go rent somewhere else. So I kind of feel her pain. It was a lot of stuff she said, man, as far as buying a house and your price is going up on your house. When I bought my first house, nobody told me that my price can go up. What they told me is I had a 30-year fixed rate. And I assumed that my rate was fixed, but that was only for the principal and the interest of the house. They didn't tell me about the taxes and the insurance and how it can fluctuate, not to mention if you got an HOA, because most people don't even know who the HOA manager is. Okay, man, I don't want to get too long winded on this subject. We got a couple more videos to go to, man. It gets worse and worse, but most importantly, we getting the information now. So hopefully we can make better decisions in the future.
Thanks for basketball too.
Can we just talk about how disheartening this is? I never thought that I would make the amount of money I do now. Our mortgage went up $150 this year. And it wasn't even like it's the mortgage, it's just our property taxes. That's $1,800 in 1 year. And we live in town. We don't live in a large city. The population here is probably 15,000 or less. We don't live in like an extravagant neighborhood. Our house was built like late 1800s, early 1900s, before 1910. Granted, we have a lot of room. There's about 3,000 square feet. We have a lot of space. But there are days that I hate this house. I know how blessed I am. I know how wonderful it is that we have as many kids as we do.
Hey, 3,000 square foot is insane. I guarantee two things happen. One, she got a good deal. And two, she cannot find a type of house that she got for cheaper or even near the price that she got that house for. So a lot of people are like stuck with their rate. So you got a 3% interest loan, and the interest rate right now is 7%. So that goes from making your house 300, let's say 300,000 to about 600,000 just on that interest rate alone, like the difference in how much house you can get. So in order to get the house that she got now, if she paid 300 for it when the interest rate was low, it's going to be 600 for that house. So she could sell it for 600, but she ain't going to be able to get in the house by herself. So in 3,000 square feet, she probably got a bunch of kids.
And everyone but the baby has their own room. But I get really aggravated because of what we pay. It should not be this hard to survive. It just shouldn't. And the worst part about it is we bought this house 1.5 years ago, and we bought it for sale by owner. So we were cut $25,000 to $50,000 deal right off the rip because it wasn't on the market. The worst part about it is we purchased for $325,000. If we were to sell right now, we're going to sell for $415,000 to $450,000. But if we sell, we couldn't even buy a 3-bedroom decent home with a basement with the potential for enough room for everyone for under $400,000. I looked at houses the other day for $300,000 and under, just to see like, what if we sell, take the equity out, and just put it towards something else, cut our payment. And interest rates are down about 1% right now from when we bought. It's not worth it. It's not worth it, and it's so frustrating. And again, I realize how blessed we really are. I really do. But it's just frustrating because pre-COVID, man, we've been living the life pre-COVID.
Big screen. All right, man. Yeah, like I said, there's no way. There's no way people can go back to life that's like pre-C word. You know what I'm saying? Like the houses that you're locked into, and when the feds and whoever get in and start raising rates and stuff like that, they're trying to stop people from buying houses. But what they're also doing is they're hurting people who already have the houses. I say if Fed's going to raise rates, they should let people keep the rates that they already got. Like implement something to where people are not going to get foreclosed on. Because what I fear is the streets are going to be painted red with foreclosures, and everybody who's holding cash will benefit from the new regime. You know what I'm saying? So if somebody got, let's say, $100,000 saved up, they will be able to buy somebody's house from them and keep the equity because that person probably can't afford the payments of the house. You know what I'm saying? So depending on what job you got or how much money you're bringing in now, there's some people who are stuck making $20 to $30 an hour who can't afford to live where they live. But there's somebody like some tech startup or somebody that worked for the government that's going to come in and they're going to get guaranteed money coming in so they can live in that area. You know what I'm saying? So government rates are kind of on par with what's around in the neighborhood. So for example, me, I was in the Navy. Somebody in the Navy, they raise our cost of living, our BAH, basic housing allowance every year. Like they're like, hey, the rate of houses went up. Here's some more money. But if somebody got like a regular job, they can't keep up. Let's go to this next one.
Let's talk about how much of a mortgage you can afford if you're making $59,000 a year. So let's say you have a monthly debt of about $500 a month, maybe credit cards, little things like that, student loans. You're going to put a down payment of about $20,000, good job, and you're going to do the conventional 30-year loan. The average debt to income ratio is about 36%, so that's what I'm going to plug in. So with that, you can afford a house that is a little under $159,000.
Big screen. I'm about to do something I never did before. We about to go look up what a house would look like if it was 159, and we're gonna look it up in let's just pick a random. Let's put or not Orlando. Let me find something. All right, boys, we on a little field trip. So I couldn't find some place in Florida that I wanted to see. So I did South Carolina. I did a small town where there's no good jobs, and we're gonna see what 150-ish can get us. All right. So we found a couple. I wish I could make this bigger. All right. So we're in where I grew up at, Florence, South Carolina. So, all right. You get a 3-bedroom, 2-bath right here. Boom. Okay. You get a bunch of land. That's a lot of land. Okay. This is what your kitchen gonna look like for 150. This is what your stuff gonna look like. You got a bunch of land to take care of. Or you can get a mobile home. This is like on par, I guess, but it's 180 out of our price range. 160. And then this is where we start to stretch ourselves. And then when they start adding in those interest rates, like I don't see nothing that's really good. This is 170 right here. 170 a mobile home. 170 again. 1300. I don't know what type of neighborhood that is. Boom. Okay, this is something we can afford. 800 square feet. And a family of 3 can't live in that. This is 170 in disguise. A mobile home. 158. This is what we got. Okay, this is a good starter home. They only got one picture. You know what that means? Inside is garbage. All right, we get some land. That it? And that's it. See? Man, come on, man. We can't even get nothing for 150.
Your monthly principal will be $924, $159,000. Your monthly principal will be $924. Your monthly property tax will be $196. Your monthly home insurance will be $49, and your monthly mortgage insurance will be $100 a month. But you would only be paying that mortgage insurance for 7 years. So your total monthly payment will be $1,270 a month. Once that mortgage insurance is over, it'll be $1,170 a month. The total interest you will pay by the end of that mortgage, interest only, is $194,000. So for that $158,000 home, you will have paid $449,000.
I need to get into real estate.
So in this case, I guess we hope the prices of homes rise. I know many of us are kind of hoping that the housing market crashes soon for reasons like this. But let's be real. If you're married, you can double that. So instead of a house that's $159,000, you can afford a house that's $318,000.
And that's the trick. That's the trick right there. You can double your house. What if somebody get laid off? What if somebody get pregnant?
That's a little better. Would you like me to calculate your mortgage based on your salary? Comment right there and I'll do it for you. And make sure to like and save so you know how to do these calculations on your own. Follow for more finance advice.
Big screen. All right, man. So you saw it. You saw what we can afford for 150. And but if you got a wife, you can double it. You know what I'm saying? But what happens when the insurance go up, the property tax go up, and stuff like that? Man, it's a dirty world out here, man. I just say protect you and yours and make good financial decisions when you're buying a house. Let's get to this next video.
The number one way to know that you can't afford a house is if your loan officer keeps telling you that rates are gonna go down and that you can refinance to get a lower payment. Today, I just had a phone call. This is the second phone call I've had in the last 5 calendar days from someone that wanted to refinance because they made their 6 payments that the loan officer said that they needed to make so they could get a lower rate. There is no lower rate to be had. This guy gets on the phone and says, hey, I need to get a lower payment. My payment is too high. I said, well, how much do you need to lower your payment by? He says by like $700 a month. I said, sir, did you know that you needed your payment to be $700 less when you signed your name on the dotted line for the house? He says, yes. That's when I became very apologetic because I knew he had been had.
Ooh, Hey, some real estate agent just got him. You know what I'm saying? Like, I had a client, him and his wife was saving up for a long time for a house. He just got out the military. He's going to start his new job. Now, for those of you who don't know, once you get out the military, you can get paid. You know what I'm saying? You can get paid for the rest of your life depending on how you got out. So he had an extra $2,000 to $3,000 coming in a month, but he was going to start his job. Him and his wife wanted to buy a brand new house. And I told them, I say, don't buy that brand new house just yet because the market is crazy. So they was going to go in for the 7% interest rate or 75% interest rate, right? With the VA loan, which means he wasn't going to put nothing down. So he's going to have to pay all the money, you know what I'm saying? Interest on all the money. So then we get to talking or whatever. And of course, he didn't listen to me at all. But I mean, it is what it is. I just tell the truth and then you either accept it or you don't. That's fine because their house was going to be their dream house. And I was telling him, bro, you're not going to live in that house for more than 20 years. It's not your dream house. You're going to be making more money. You're going to want to do something else, especially when the kids get out of school. Make a good financial investment, something you can rent out later. All right, cool. Did he listen? Nah. They got the biggest house they can find for the most money they can find. And now rates are going up. And now he like stuck in a situation and he cannot refinance and go down because the market ain't really moving like that. So now he gotta wait until rates go down because he can't afford the house. He like house poor now. You know what I'm saying? So it is what it is. But when these realtors was telling people, hey man, date the rate, marry the house, man, I was like, that sounds like something crazy. But you got to understand. But also you got to understand, realtors, that's their job. They got to sell houses to get paid. And what they gonna do? Stop selling the house to you because it might not be beneficial to you. You know what I'm saying? Rates could have went down, but who gonna feed their family if they can't sell their house? And that's what I was telling them. But it is what it is.
Loan officers should never promise anybody that the rates are going to go down to a certain number. Loan officers should never make promises or guarantees that someone can get a better payment or a lower payment because we have no idea what the rates are going to go down to. Yes, we did expect interest rates to come down, but for him to be successful in his venture, interest rates would have to be in the fours. Unfortunately, I don't know what he's going to end up doing. But again, like I said, this is the second person in 5 days I had the same exact apologetic conversation with because I'm apologizing on behalf of one of my colleagues that's somewhere that was overzealous and needed a commission. No tea, no shade, y'all. I be saying this. We are salespeople. So I'm telling you right now, if you can't afford the payment the way that it is when you sign up for it, put the house back.
Big screen. All right. She was the first person to actually say that we are salespeople. I never even heard that. When I was about to buy my first house, right? I had this lady. She looked good and stuff. You know what I'm saying? Me and my wife went with her to go look at houses and stuff. She was talking about how she was going to come over for the barbecue and stuff like that. I thought I had a real friend. So I was going to get the house. I put in my bid for the house is on short sale. What does that mean? I don't know. I think the person couldn't afford the house. They was trying to get rid of it. The bank and the person was working some type of deal out to just get from under the debt. So the person ended up putting the house up for 180,000. And this was way back when. And I put a bid in for 180,000, thinking I was going to get the house. And then, they kind of dragged it along. The appraisal came back at 200,000. And the bank was like, nah, we want 200,000 for it. But by the time the bank told me they wanted 200,000 for it, I was off to deployment. So I couldn't get the house. You know what I'm saying? But all in all, it was a good deal. I ended up getting the house for way cheaper, pretty much same square footage. And I was able to sell it and make money and all that other stuff. But this person went all the way out their way to introduce their husband to me, to say they were going to go on barbecues with me. You know what I'm saying? She was coming up to the showing dressing seductively and stuff like that. Even though my wife was around, she was trying to get that bread. And all I know is she a good salesperson, but she didn't sell me that day. You know what I'm saying? I was thinking with this head. All right, y'all, we're going to end this off with a little lightheartedness, something that's more upbeat and something more like just somebody doing something right. You know what I'm saying? I heard her talking and stuff. I was listening to her talking stuff and I was like, yo, somebody doing it right. You know what I'm saying? So let's listen to her real quick.
Officially made our first mortgage payment of 2024. With paying our normal $2,000, that put us in the $89,000 range, which is so crazy. A year ago, we were at $147,000. Make sure to leave your 2024 goals in the comments. Our goal is to accomplish the same as last year. We shaved $55K off of our principal. If we do that again this year, we would end the year at $36,500. And it would be our last full year with a mortgage. We are already starting out the year at a good spot with turning our 30-year mortgage into an 11. It is a good feeling to know that worst case scenario, we would be done with this thing by 2031.
Big screen. All right, man. Look, she winning. You know what I'm saying? I know somebody that I know looking at this video right here. I know she eating ramen. I know she drive her beater. I know she don't eat out. I know, bro, I could just tell like that's a person on a mission. You know what I'm saying? To be debt free. Me and my wife was talking about something like that. We about to do a 5-year thing where we ain't buying nothing. You know what I'm saying? I love spending a little bit of money since I got it. Being a successful entrepreneur, like after getting out of the military and getting a military check too. You know what I'm saying? I was raking in a little bit of bread. We enjoyed ourselves. We lived in a high-rise condo and stuff like that. We was just moving places and actually doing a lot of trips. But the next 5 years, man, we ain't going nowhere. We ain't gonna do nothing, man. We're gonna focus on our kids, and then we actually gonna save this money, buy a house straight out, probably 300,000, something slight. Hopefully, you know, the market go down, but not too much. I don't want people to lose money. People who bought those houses back when, I don't want them to lose too much money. But when the market crash, I'm gonna have over 100 grand saved, I believe. So with that being said, I'll see you on the next video. Credit CEO out.